Uber stock has been extremely volatile since its IPO back in 2019. However, the stock is up over 200% from the lows that it set in 2022. This is because the company is seeing its revenue continuing to grow and hit all-time highs. Its free cash flows have also gone from negative to extremely positive over the past 4 years. Many investors have now been asking me to take a look into Uber's stock and share my thoughts on if the stock is looking like a buy now or if it is still looking expensive. So in today's video, I want to share my research and thoughts on Uber's stock today. So with that being said, let's just hop right into the video. And I want to start by taking a look at the highlights of the most recent quarter, which was the third quarter of 2024. So right here, we can see that gross bookings grew 16% year over year to $41 billion, or 20% on a constant currency basis. So Uber's bookings are still continuing to grow at double-digit growth rates, which is a great thing to see. Trips during the quarter grew 17% year over year to 2.9 billion, or approximately 31 million trips per day on average. That's a pretty insane stat. Revenue grew 20% year over year to 11.2 billion, or 22% on a constant currency basis. Adjusted EBITDA was 1.7 billion, up 55% year over year. Net cash provided by operating activities was 2.2 billion, and free cash flow was $2.1 billion. The company also spent $375 million repurchasing shares, and unrestricted cash, cash and cash equivalents, and short-term investments are now 9.1 billion at the end of the quarter. So Uber's gross bookings, trips, revenue, EBITDA, operating cash flow, and free cash flow are all growing very well. And it's now producing $2 billion in free cash flow on the quarter, which is a significant amount of free cash flow. So this company is continuing to grow, and it is very profitable. Now, they also gave us the outlook for the fourth quarter of 2024, and they say gross bookings of 42.75 billion to 44.25 billion, which represents 16 to 20% year over year growth. So they are expecting gross bookings and probably revenue to continue growing at about 16 to 20% into the fourth quarter. Adjusted EBITDA is also projected to come in at about $1.83 billion, which represents growth of over 40% year over year. So adjusted EBITDA also looks like it is continuing to expand massively on a year over year basis. So then my question is, what is driving all of this growth, with the pun intended? So now let's go and take a look at Uber's most recent investor presentation, which is actually from February of 2024. So it's kind of dated, but it does still give us some projections for what they expect. So let's take a look. So on this slide, we can see that consumers are using more of Uber's products and spending more on the platform. And here they say more than a third of monthly consumers are multi-product. And it looks like 21% of monthly consumers were only using multi-products in the first quarter of 2021. And by the fourth quarter of 2023, that grew to 34%. Multi-product consumers spend over 3x more than single product consumers. So it seems like as time passes, more consumers are using more than one of Uber's products. So every customer is becoming more profitable on average for Uber. Uber also launched Uber One, which is a paid subscription service that offers benefits to both Uber and Uber Eats consumers. It costs $9.99 per month and now has 19 million subscribers, and they have 3x'd their subscriber base since the fourth quarter of 2021. Uber is also expanding into new products like Uber Health, Uber Direct, and advertising. For example, Uber shows ads on its platforms when people book rides and are looking for food on Uber Eats. So the company is trying to diversify its revenue streams and expand its total addressable markets. Uber also says that even in its most mature markets, it's continuing to see strong growth. For example, in 2021, the US had a 7% penetration rate, and in 2023, it increased to 10%. All of Uber's major markets are seeing more adoption and penetration rates as time goes on as well. Uber is also planting seeds in new markets, such as Japan, Argentina, and South Korea, where it has seen its gross bookings grow on the order of 10x over the past couple of years. So Uber's international expansion seems early and still in play for future growth. In 2023, Uber's gross bookings hit $70 billion and grew 32% year over year. The company also had $5 billion in EBITDA for the year and was rated the category leader in all of its top 10 operating countries. Uber Delivery also grew its bookings to $65 billion and increased by 15% year over year. It also had a leadership position in 7 out of its top 10 countries. Now, what's also interesting is Uber announced that it's partnering with autonomous vehicle companies to allow people to book an autonomous ride from the Uber app. This essentially allows autonomous vehicle companies to gain access to Uber's millions of users around the globe. In September of 2024, Uber and Waymo expanded their partnership, and this says, Waymo and Uber expand partnership to bring autonomous ride-hailing to Austin and Atlanta. So it seems like both Waymo and Uber are continuing to expand their partnership across the United States. Uber also partnered with WeRide in Abu Dhabi, which will be the first autonomous vehicle available on Uber outside of the United States. So it seems like Uber is also expanding its autonomous vehicle partnerships outside of the United States and internationally. Now, at the beginning of 2023, Uber gave a 3-year outlook to grow gross bookings by mid to high teens annually. They're also expecting adjusted EBITDA to grow around 40% annually over the next 3 years, and for free cash flow to be roughly 90% of adjusted EBITDA. And so far in the third quarter of 2024, we have seen that Uber has delivered on this projection. Now, if we go back to Uber's Q4 2024 projections, we can see that they are expecting adjusted EBITDA once again in the middle of their range of $1.83 billion. Now, if we pull out our calculator very quickly, we can go $1.83 billion and multiply that by 4 to get an annualized adjusted EBITDA for Uber based on their fourth quarter results. And here we can see that this would be annualized adjusted EBITDA of $7.32 billion. Now, Uber also told us that they are expecting a 90% conversion rate from adjusted EBITDA into actual free cash flow for the company. So we can multiply this $7.32 billion in annualized adjusted EBITDA by 0.9 to find the free cash flow expectation for 2024. And we get about $6.6 billion if we want to round up. So $6.6 billion in free cash flow is about the profit potential of Uber's business as of the fourth quarter of 2024. Now, Uber is also expecting their free cash flow to grow by about 30% annually over the next 2 years. So if we multiply this by 1.3 twice, just to do it quickly, then we get about $11.2 billion in free cash flow by the end of 2026, which again was their 3-year projection at the end of 2023. So basically, Uber is expecting about $11.2 billion in actual free cash flow for 2026. Now, if we head over to Stock Unlock, we can see here that analysts are expecting Uber to produce about $60 billion in revenue for 2026, and on a compounded annual basis, they are expecting revenue to compound by about 12.5% out to 2026 as well. But that's not really the main metric. The main metric is that analysts are expecting $60 billion in revenue for 2026. So if we go $11.2 billion in free cash flow that Uber has pretty much projected for the year, and we divide it by $60 billion in revenue, then this suggests that Uber would need to hit around a 19% free cash flow margin and also hit the analyst expectations of $60 billion in revenue for the year. So basically what Uber needs to do to achieve this free cash flow projection is expand its margins a little bit, because currently the free cash flow margin is around 14%, and continue growing revenue at about 12% annually. That actually does seem pretty realistic to me personally. So I do actually think that there is a chance that Uber could hit their projections of growing free cash flow by about 30% annually over the next couple of years. What I also always love to do is take a look at the stock's insight score on Stock Unlock to see if we can spot any red flags here. So if we take a look at Uber's profitability, we can see that its gross margin is about 32.7%, operating margin is about 7%, net margin is about 10.5%, and that free cash flow margin, as we can see, is about 14.2%. So this is why I am saying that Uber needs to expand its free cash flow margin and get it up to about 19% over the next couple of years. Now, if we take a look at the management score, it's only about a 3, which is kind of not that great. Stock-based compensation as a percentage of revenue is actually pretty decent at 4.4%, and stock-based compensation as a percentage of operating cash flows and free cash flows is actually pretty high at around 31% of free cash flows. So the stock-based compensation going on over at Uber is actually pretty high, and that is a red flag for me. Now, very quickly, if we head over to Uber's cash flow statement, we can see that its stock-based compensation has been flatlining and actually coming down over the past couple of quarters at the same time as its operating cash flows have been skyrocketing. So if Uber can maintain its current levels of stock-based compensation, or ideally see it continue to come down, as free cash flow continues to grow, then stock-based compensation will continue to become less and less relevant over time in terms of the percentage of free cash flow that it actually takes up. So that is kind of what I would like to see from Uber's business. But it is still worth noting that stock-based compensation today is still quite high. So let's head back over to our insights very quickly here, and we can see that Uber's growth is very strong with a 4.75. Revenue is growing strong, gross profits, operating income, net income, operating cash flow, free cash flow, book value, and tangible book value are all growing extremely well. So Uber's profitability and profit margins are expanding strong on a year-over-year basis, and I'm just hoping that this does continue into the future. The financial health for the business is kind of lower at 2.75. Current ratio is above 1. That is good to see. The company does have a lot of intangible assets. Its shares have also increased by 2% over the past year, and this is probably due to the high amount of stock-based compensation that the company does. Because remember, the company is actually buying back shares. In the most recent quarter, it spent about $400 million buying back shares. But the stock-based compensation is so high that even with some share buybacks going on, the net share count is still growing and expanding. And that is why stock-based compensation is a red flag, is because it does dilute shareholders. The debt to EBITDA ratio is also 3, which is on the higher end. So the company does actually have quite a bit of debt as well. So overall, at a very quick glance, we can see that Uber's profitability today is kind of low, and it does need to expand going forward. There is a lot of stock-based compensation going on. The company is growing very quickly, and its balance sheet is not really the best. So that's kind of the overview that we're getting here from Stock Unlock Insights. I also always like to take a look at the insider trading that is going on. So I like to take a look at the buys and sells. And here we can see that there has not really been any insider buying going on, and there's actually been a significant amount of insider selling. In fact, right here, there was some large insider sales by the CEO of about $36 million. And this is quite a bit of insider selling, and this was in July of 2024. And again, right here, we can see another $25 million sale by the CEO. So it seems like insiders are continuing to sell a lot of stock in the business, and there's not really a lot of insider buying going on. So I don't always love to see that, and it seems like the CEO is also selling tens of millions of dollars worth of shares. That's also kind of a red flag for me. Some insider selling is not a red flag, but when it's tens of millions and it's happening consistently, that's a lot of insider selling going on. So the last thing that I want to do is a quick discounted cash flow calculation. So here we're going to project out Uber's free cash flow over the next 3 years and say that it is going to continue growing at about 30% annually. The company is going to continue diluting at about 3% annually, and it is going to maintain its current price to free cash flow of about 23. Now, if Uber can do this and actually hit their 30% compounded annual growth rate targets to the free cash flow, then the stock could compound by about 24.7% annually from here, and its fair value is about $96 per share. So basically, if Uber can actually continue growing its free cash flow significantly over the next few years, then there is a pretty good argument that the stock is looking cheap today. Now, what I also like to do is see what the market is currently pricing into the stock for it to achieve a compounded annual growth rate of 10%, which is the S&P's historical average return rate. So basically a market average return. So to do that, we have to lower down the growth rate. And I already found this number earlier, and it's 14.8%. What this means is right now, the market is pricing in about 14.8% annual free cash flow growth for Uber over the next 3 years and maintaining that 23 price to free cash flow. So when I take a look at this, then as the investor, I just ask myself, do I think that this is too optimistic or too pessimistic? And for you, you should ask yourself the same question. So do you think that Uber can actually continue growing its free cash flow by around 15% annually over the next 3 years? If so, then there is an argument that the stock could be looking undervalued today. However, if you think that this is too optimistic, then there is an argument that the stock is actually looking overvalued today. Now, if we also scroll down, this would mean that Uber would have to hit $8.8 billion in free cash flow by the year of 2027, or really by the third quarter of 2027. So again, I would ask myself if I think that this is too optimistic or pessimistic. And personally, I actually think that this is on the pessimistic side because Uber's business does seem like it is continuing to grow very strong. And I actually want to give you guys an anecdotal example that I had recently in Mexico when I was down there over the past month. So my fiance and I were down in Mexico, and we were in Puerto Vallarta, and we were trying to get a cab. We went out to the market one night at the pier. So we were trying to get a cab home, and I was actually with my sister and her husband as well. So my sister and her husband got a cab, and I think it was like, I don't know, $5 to go back to the resort, and we were going to take a different cab later on. So when we went to find a cab driver, we got quoted at about $25 to do the same cab ride. And it was like a 5-minute cab ride back to our resort. And it was getting pretty late, we didn't really want to stay out long looking around for cabs. So I was like, let's see if Mexico has Uber because, kind of sadly I didn't check. So I have Uber on my phone, obviously. And I checked if there was Ubers in Mexico. And to my surprise, there was. Well, I really shouldn't have been surprised. But anyways, we ended up getting an Uber. It was very seamless, very easy. We didn't have to walk around. We didn't have to find a cab because it took us like 15 minutes to find that previous cab driver. And we got quoted on Uber to get back to our resort for about $6 US. So we saved money, we saved time. It was much more safe, honestly, and it was just a much better experience. And whenever I travel, I am always using Ubers now. Like, I don't really like the taxi services, especially when I'm going to international countries like Mexico or when I was over in Asia. Well, in Asia, I was actually using Grab. But I want to use these services now, these apps. And the reason is because you can actually see the price when, or even before you book the Uber. But when you're using a cab, it's like this whole negotiation thing. You might get scammed. It's a little bit more sketchy. Like, my fiance and I have been in countries where they actually cover up the meter in the taxi. And then when you get there, it's like they'll just try and scam you out of your money. So we've also learned that when we get into a taxi, if the meter is covered, we don't accept that taxi driver anymore. So basically what I'm trying to say is it feels a lot more safe and a lot more and a lot less scammy to use Uber when I'm traveling than to simply just try and negotiate with taxi drivers. And for that reason, I freaking love Uber. Like, as a customer, I freaking love Uber. I use Uber all the time. I don't use taxis anymore. I prefer to use Uber whenever I do anything and whenever I need a ride anywhere. So I do understand the moat of this business. And I do actually think that this business does have a moat. Uber is basically a verb at this point. I do think that there might be a risk with Waymo and autonomous vehicles coming up, though, because with an autonomous vehicle, there's two things. The first thing is you don't really have to pay a driver, right? I mean, Uber's main expense probably is paying their drivers because labor is pretty expensive. So with an autonomous vehicle, you don't have to pay a driver. But with that being said, the autonomous vehicle fleet has to be maintained, and that has to be paid for by a company like Waymo. Whereas with Uber, I believe they're not paying their drivers maintenance expenses on their vehicles. They're just paying their drivers, and then it's kind of factored into the price that they pay their drivers that you want to pay them so that they can at least maintain their vehicles and get a profit, right? Basically, with Uber, they have to pay labor, which also would have to cover depreciation of the vehicle. But with Waymo, they don't have to pay the driver, but they obviously have to pay all of the expenses to maintain their fleet. So it's a little bit of a different business model. Based on some research that I've done, which honestly has just been some quick Googling and some quick reading on Reddit from real world examples of people down in San Francisco of Uber prices versus Waymo prices, it seems like Waymo prices, when you book, are slightly more expensive, but you don't have to tip because there's no driver. So if you factor out the tip on the driver, then Waymo is actually cheaper. So we're going to have to see if Waymo takes market share from Uber and how that whole relationship works, because Waymo also has deals with Uber where people can book Waymos on Uber's app. So how is that going to work? Waymo also has their own app. So how's that going to work? Those are kind of the things holding me back with the whole autonomous driving thing going on. But Uber is definitely a stock that I'm looking at and I'm going to be paying attention to. I don't love the high stock-based compensation either. If you guys have been watching my channel for some time, you know that I like companies with high insider ownership, low stock-based compensation, and those are the two things that I look for and make me comfortable in my portfolio, because it means that the management is aligned. Their incentives are aligned with me as a shareholder as well, because they're shareholders themselves. So seeing low insider ownership and seeing the CEO basically liquidating tens of millions of dollars of shares is kind of a red flag for me. That in combination with the high stock-based compensation. So those are things that I would just have to kind of look over, which kind of goes against my own investment strategy. And that also is holding me back from starting a position in Uber. But when you take a look at the free cash flow potential of this business, when you take a look at their projections over the next few years, their revenue growth, the consistency of the business's growth, their international expansion, them getting into more verticals with advertisements and Uber Health and the Uber One app or the Uber One subscription, I do see that growth as well. So there's some pros and cons here, basically. This isn't like the perfect investment for me. It's not like a slam dunk or a home run or anything like that. but I do see the value potential here. So that's why I think that it is an interesting stock. I haven't purchased it yet, but I do see why people are interested in it at its current price. But there's just some things holding me back. Maybe I need to do more research. Maybe I need to look into things more, but that's where I'm standing today. That is objective as I can possibly be on this business. I believe I have covered all of the goods and bads that I have found and some questions that I also have as an investor. So I hope you guys enjoyed this video. If you did, as always, please remember to leave a like on it. If you're new here and you want to stick around and see more content like this, then please consider subscribing to the channel. But that's going to wrap up the video for today, everyone. As always, thank you so much for tuning in. I truly do appreciate it, and I really hope to see you all again in my next video.